Hello and welcome back. The index is continuing with its buoyancy and it is inching upwards gradually for last 3-4 sessions. If we look at this particular price area, we can clearly see that Nifty is facing very strong resistance around 22,700 800 zone. So this area is acting as a very strong resistance. It seems that it is likely to continue to act as a resistance in the very short term. For some reason, if it manages to surpass, Nifty manages to surpass this 22,800 mark and sustain above it, then the next level to watch out for would be 23,350 odd levels. So that is the area that could be attempted beyond 23,000 mark. Immediate support for the index is placed around 22,350 400 zone, and after that medium term support of the index is placed around 22,000 mark. So this is the broader setup, and as I said, the multiple averages setup is positively placed and index is maintaining above its 5-day average for last 3-4 sessions, which is a sign of strength. So this is the broader setup of the index. As far as Bank Nifty is concerned, Bank Nifty is also witnessing a very strong up move in last few days. It has been witnessing very strong up moves. For last few days, the index has shot up from 47,800 to almost 50,000 mark in just 2 days back, and now it is consolidating around 49,300 odd levels. So 50,000 is likely to act as very strong resistance in the very short term. Beyond 50,000, the next hurdle would be around 50,800 and 51,000 600 marks. So those are the resistance zones on the higher side. Immediate support for the index is placed around 49,000, and below that 48,600 48,400, that zone is likely to act as a support. As far as medium term support of the index is concerned, the medium term support is placed around 47,200 mark. So until and unless the index manages to sustain above 47,200, it is safe to assume that the uptrend that we have been witnessing for quite some time now, broader uptrend, it is intact. So this is the broader setup of the index, and we need to see what kind of news flow we get going forward. But it seems that the volatility is likely to stay here, and even going forward in next 1.5 month, the volatility is likely to hike, increase very sharply. So we need to look at the volatility also going forward, and traders are suggested to hedge their positions as they feel appropriate, and because volatile markets are likely to give you very sharp swings on the either side, so it is always better to hedge your positions. Standard warning: please note that investment in securities market are subject to market risks. Read all the related documents carefully before investing.